Many Americans prefer investing in stocks. You might also understand why they invest in stocks. The stock market, shall we consider the S&P 500 in particular? The long-term returns are significantly higher than real estate. In the United States, the reason stock investment is preferred over real estate investment. This is about the better reasons. If you look at each advantage, you might also understand why they invest in stocks. Let's take a look at what kind of appeal is offered to investors. This channel, it provides professional information on U.S. law, tax law, and financial planning in an easily understandable way. Not just this video, we will continue to upload more beneficial content in the future. I hope you don't miss out. To ensure that, if you haven't already, please hit the like and subscribe buttons. Now, the first reason why stock investment is preferred over real estate investment is the high return rate. The stock market, shall we consider the S&P 500 in particular? Its long-term return rate is significantly higher than real estate. Of course, this depends on how you calculate it, but it seems undeniable that it's higher. If we assume that $100 was invested in each of the two assets, from 1970 to 2023, the S&P 500 grew to $22,400, while real estate only reached $1,500. So, annual average return rate of the S&P 500, depending on how you calculate it, is generally said to be between 10% and 13%, roughly around 11%. Real estate is said to be around 6%. So, this difference has a significant impact on an investor's asset growth. In the long term, the first advantage of the stock market and stock investment can be mentioned. The second is, investment in the entire market is possible. That's an advantage of the stock market. You can avoid the difficulty of selecting individual stocks and invest in the entire market. As I mentioned earlier, if you use the same example by investing in an S&P 500 index fund, you can easily track the performance of the entire U.S. stock market. For someone who trusts and believes in the long-term upward trend of the U.S. market, there's nothing easier than this. However, for example, if you're unsure about selecting individual stocks and decide to invest in such index ETF products, you can expect an annual average return of over 10%. Of course, there's no guarantee that history will repeat itself, but you can still have that expectation. But with real estate, there's no concept of following the market from the start. There's the burden of having to choose a property in a specific area. The risk is greater. Next, the third point is a similar topic. Liquidity and accessibility can be mentioned. With stocks, buying and selling is easy. You can just buy and sell directly in the market. And also accessibility. You can invest with a small amount. College students, young people, older people, people with a lot of assets, and those with fewer assets all face fewer restrictions in terms of scale, in terms of investment. Or you can also do fractional buying, so you can gradually purchase shares of blue chip companies. On the other hand, real estate involves larger chunks, and it takes more time and costs more to transact. Also, the initial investment amount is definitely larger. Next, there's the ease of management. It's quite obvious. With stock investments, there's not much for me to manage. It's not comparable to real estate. Now, if you compare the two, real estate investment involves collecting rent, checking if the tenant is paying properly, responding to repair requests, and spending time managing tenants, which is a burden. But with stock investments, checking earnings reports, that's about it. Other than that, there's really nothing else to do. No special management is needed. So you can spend much more time on things that are more valuable to you. That's an advantage, right? Next, there are global investment opportunities. When you invest in stocks, you're not just investing in the US. You can also invest in top companies around the world. For example, you can invest in the Chinese market. You can also invest in the Korean market. It's not just about the growth drivers of domestic and US markets, but you can also add top companies from other countries to your portfolio. In contrast, with real estate, it's obvious, but the range of possibilities and choices is much more limited. Next, we can mention the high growth potential. Of course, this doesn't apply to index products. You can invest in innovative startups or early stage companies with high growth potential. Even without mentioning it, there are stocks like Tesla and Nvidia. In such cases, these investment opportunities, while they can turn into risks, offer the chance for tremendous returns if you believe in this vision. In contrast, expecting this level of explosive growth in real estate is not realistic. Next, we can mention diversity and diversification in investments. With ETFs or mutual funds, you can easily diversify your investments across various industries and companies. This means you can reduce risk. However, in the case of individual real estate investments, of course, I'm not talking about REITs or anything like that. I'm talking about rental properties that you manage yourself. In such cases, there is a concentrated risk. So, compared to investing in a global ETF that invests in major companies worldwide, Investing in rental real estate in a specific area is distinctly different. Next, the rental income, often cited as an advantage of real estate, is not something absent in stocks. What is it? Can be referred to as dividend income. Many companies regularly pay dividends. So, in addition to the potential increase in asset value and stock price, there is also the additional income from dividends. It's similar to rental income, but a good point is that there's no burden of management. You're not doing property management or managing tenants, are you? Then, especially many companies known as dividend stocks have consistently increased their dividends. This also provides investors with a stable cash flow, so this can be considered an advantage worth considering. Next, we can mention transparency. It means being transparent in terms of information accessibility. Stock market information is disclosed in real time, right? Especially, stocks of listed companies are subject to strict regulation and supervision by the SEC in the United States. As a result, information is disclosed transparently. You could say that sufficient information is provided for making investment decisions. In contrast, real estate has a much higher level of information asymmetry compared to listed company stocks. Next, let's talk about tax benefits. Of course, real estate tax benefits are quite significant. However, stocks also have benefits. There are tax benefits such as a reduced capital gains tax rate when held long-term. And if we consider that the step-up basis also applies to stocks, we can say that stocks, while not as much as real estate, do have tax benefits. And if we look at the maturity of the stock market, we can say that the stock market is much more conducive to implementing automated investment strategies. For example, if you automatically invest 10% of your monthly salary into an index fund, or use a 401k or IRA to have these automatically transferred and invested, you can avoid making emotional decisions. You can also gain the advantage of achieving stable returns in the long term. This is actually sufficient. When we consider the advantages of real estate, we might think that stocks fall short compared to real estate, but now that we see the advantages of stocks, they are also significant. So what I'm trying to convey is that you should do both. If you have the means, you can adjust the proportions according to each situation to determine what is appropriate. The point is that you should definitely consider both sides. In fact, because of these advantages, many Americans prefer investing in stocks. I understand that stocks make up about 40% of their total investment assets. As I mentioned earlier, you need to choose an appropriate investment method based on your financial situation and investment goals, as both stocks and real estate have their pros and cons. You should create a balanced portfolio that suits your situation. In other words, consider your risk tolerance, investment sense, goals, and how much time you have. Develop the right strategy, and then you need to execute accordingly. I hope today's content was helpful. We will continue to provide this kind of information. Please help this channel grow together with you. Before we finish, I kindly ask you to subscribe and like. Please also help spread this information to those around you. Thank you.